Hey guys, welcome back to another episode of Market Mastery. We are going to cover off probably what I believe is going to be the most important week in markets for this entire bear market. And we could be sitting on a historic CPI event tonight. We're going to cover all of that off, what I'm seeing on Bitcoin, major altcoins like Ethereum, etc. And also what's happening in the macro economy with all these banks going bankrupt, the 2-year yield absolutely capitulating over the last couple of days, and then also CPI tonight. So if you're liking our content, please leave a like and subscribe, or drop a comment in the chat box below, because that helps get our content going out and more eyes on it. It helps us grow the channel. Thanks a lot. Basically, guys, we're looking at Bitcoin right here at the moment. And we are back up in the supply zone right now after a massive pump. We were watching this weekly time frame. It was looking pretty nasty there for a while, especially towards the back end of the week. And what I wanted to see was it close above this weekly order block through here. And obviously it closed above that really nicely and then absolutely launched on Monday, right? So the weekly time frame is looking good. Daily time frame is looking pretty good now as well. But I think a lot of it is going to depend on what happens tonight at CPI, if we're going to come up and test this 30K level and finally get a breakout of this range that we've been in now for 271 days, which is a fair amount of time to be in this accumulation zone between 15K and 25. But I think probably the most important things to be talking about right now are the SPX, right? So we are back under the downtrend resistance level. And normally if we were like this, I would just be expecting this is going to come back down here, and we'd be putting in lows, equal lows down here, or at least testing the original selling climax of this range low around 3,640. But there has been a little bit of a curveball, with these banks going bankrupt. Credit Suisse is one that isn't looking too bad, but I mean, over the long term is actually pretty nasty. That was down 10% in pre-market trading. We were looking at Western Alliance Bank Corporation. That absolutely got annihilated. In 2 days, this sold off pretty much 70%, but it has had quite a strong rally yesterday in Monday's trading and managed to bounce 100%. So that one might end up finding a way to save itself if it doesn't roll over again for the rest of the week in the next few days of trading. But FRC is one that actually is not looking very good, to be honest. It had pretty much 85% sell off over Friday and Monday, and only really had like a 15-16% bounce on Monday, where all the other banks, which are probably going to be okay, bounced about 100%. So there's still more banks that could be going bankrupt. And that's basically because they have a gap in their balance sheets of when the market was going really well and people were putting lots of money into the banks, basically as deposits. They were taking those deposits and they were buying government bonds. And now, as you can see here, the 2-year government bonds, the yield for these has gone through the roof, and they were buying them back down here when, they were under 1%. And now, you can get them for, last week you get them for 5%. Today, you can only get them for 4%. And so that is because that in this huge capitulation that we've had is because the banks have started to break. And a lot of people are expecting that is going to cause the Federal Reserve to pause, right? Because generally the Federal Reserve's idea was that, or the market's idea of the Federal Reserve was that they would continue to hike rates higher and higher until something broke. Now we're actually having a systemic risk in the banking system, and we've got a lot of banks going bankrupt at the moment, right? So that, in my opinion, is something is breaking. And obviously the smart money is seeing that. And so the yield here is dropping because everybody's rushed in to buy bonds up here as quickly as possible to get these higher rates. And it's pushing the yield down as the price of these bonds actually start to rally. A good one to look at as well is JNK junk bonds, because that gives a good indication of risk to the upside, but that hasn't actually started to rally yet, which is interesting. So financial conditions still hanging out, around these lower levels. They haven't seemed to have picked up just yet. So that's going to be something to keep our eye on. But basically the 2-year coming down almost a full percent in 3 days is a massive move, and really important tonight because we do have CPI tonight. If this is a hotter than expected CPI, Basically, what we're going to see is this is probably going to bounce and potentially reclaim this trend line. I think that's going to be very bearish for risk assets. We will see NASDAQ start to roll over, but more importantly, the SPX. And the market I like to watch is the ES, which is a CME futures contract. And it's sitting right on the level at the moment, right? If that can bounce and we end up, closing back above, 3,900 or even back above 4K, that's not going to happen today, but, potentially later on in this week and break out from this downtrend through here, then that's going to be a huge signal. Wall Street is going in heavy again, and everybody's going back into risk on, and that will give crypto the potential to finally rally out of this 30K bracket that it's been in. So out of this 25K resistance that it's been held under for, almost a year now, and give us that opportunity to push up to 30K, right? So at the moment, we're literally sitting right on the level, but more importantly, I think the one to watch is the SPX chart, right? So SPX is the ticker, because that's the actual spot market, not the futures contract, right? So that's where all the really big volume is in getting traded, but it's only open during the New York trading hours from 9:30 a.m. in the morning, right? So watch this one and see how it trades tonight, and see how it responds to the CPI data, right? Because if CPI comes in hotter than expected, then even though banks are starting to fail and stuff like that, that still puts the pressure back on the Fed that they're going to have to keep hiking because inflation is out of control. And remember, the dual mandate is the only two things that the Federal Reserve can really focus on, right? And if we've still got indication that data is still suggesting that inflation is still out of control, that's going to have a lot of pressure on them for FOMC, which is next week on March 22nd, to have to at least raise 25 basis points. If CPI comes out lower tonight, then potentially that gives us a lot more wiggle room here for a bounce in risk assets, and yields to sell off a little bit more, because it will give the Fed a little bit more space to finally pivot, and finally put a pause in rate hikes, and then just see what happens over the next couple of CPIs, which more likely are going to start to drop off over the next couple of months, right? So if we do get to see that downtrend continue in CPI, it's going to be very bullish for risk assets. And I think that realistically will open the gateway up for BTC to push out the top here, finally break through this resistance and push up to 30K, right? I was expecting last week altcoins to sell off and, potentially come back down here, but everything has changed since these banks are breaking down. The Federal Reserve has had to come out with its emergency relief fund to secure deposits, because it's basically another form of QE. Right? So the bulls are going crazy right now. Anyone that is bullish is definitely deploying capital over the next few days. So we're going to have to wait to see how it plays out tonight. And it could be a little bit of a curveball tonight if CPI comes in hot. But if it doesn't come in hot, I think we will flip back into an uptrend here. And this possibly could be the bottom. And this is just a perfect retest of this downtrend channel that we've broken out of. So I think we're in such an important position right now, because realistically, what happens tonight at CPI could dictate the futures. If we're going to come down here and it's going to take us a few more months and, wash out, the bulls and come back down into this 3,000, 3,400 range, or if we just bounce off this level here and push to the upside, right? So it's going to be really interesting to see how this one plays out tonight, guys. Don't get wrecked trying to trade it with too much size, because I think it's going to be a really violent one. It'll probably will move aggressively in both directions before it finally finds the true trend. But I will leave links where you can watch the data where it comes out the fastest, which in my opinion is investing.com. So check that out. Also, we are running a free course at the moment. If you'd like to check out our free course, there is a link below in the chat box, the comment section, I should say, of a way where you just drop your email into a folder, and then I'll be able to email you out the free course and the webinar. So thanks a lot for tuning in, guys, and we'll see you all in the next episode.